So thank you very much. As the head of the House Switzerland, I have the privilege to introduce this morning session. First of all, welcome in the House Switzerland. We're very proud to work with the SDC on that topic that we've been following for years, and happy to give the floor to Christian Frutiger. Just for your information, session will be recorded, but not live streamed, so you can catch up later on. And I wish you a great panel. Excellency.
Thank you very much, Alexandre. A warm welcome this morning. It's a cold morning. I know it wasn't quite easy to get here, so a few more people might still arrive. Warm welcome to this session on the Blue Peace Bond financing structure, which is the basis for the first ever Blue Peace Bond. We're very excited to have this discussion here with you at the World Economic Forum. My name is Christian Frutiger. I head thematic cooperation in the Swiss Development Agency, and I'm really looking forward to a fascinating morning. Financing for development or financing for the SDGs is a challenge. The UN projects or states that currently we lack $4 trillion or Swiss francs per year in order to reach the SDGs by 2030. In addition, the COVID crisis happened, and that increased that gap by another $2 trillion. So 4 trillion plus 2 trillion US dollars needed every year to meet the SDGs. Now, official development assistance was higher last year than in the previous years, about 7–8%, but it only amounts to about 186 million. So between the 186 million and the 6 trillion, there is quite a delta. So there is a need for other financing sources. Now, you've all been, or many of you have been here at the WEF for several days, and you've heard that in the financial markets, money doesn't seem to be a problem. And even to meet the SDGs, we keep on being told that money is not a challenge. So how do we channel these funds, which seem to be around, into sustainable development and into countries, into poorer countries, into the low-income countries of this world? So this is what we want to discuss today with a concrete example. The Blue Peace Financing Initiative tries exactly that in Western Africa, channel funds through a super sovereign authority, the Gambia River Basin Authority, in order to benefit the local population with infrastructure projects, with access to water, with access to irrigation, and with a number of other perspectives. We will hear today from UNCDF, the UN Capital Development Fund, with whom we host this event, and thanks again to UNCDF. We will hear from the Economist Intelligence Unit. We will hear from the Swiss Bankers Association, and of course we hope to have a brief exchange also with you here in the public, and we can continue that conversation afterwards over coffee. But I would now like to start with the introduction and give the floor to the Director General of the Swiss Development Agency, Ambassador Patricia Dancy. Patricia joined the SDC in 2020, and before was for over 20 years at the International Committee of the Red Cross, literally anywhere in the world, and then also at headquarters heading the Africa Directorate. Patricia, please.
Thank you very much, Christian. And as you said, the initiative started before I got to the SDC, and so the credit goes all to you and the ones that started it. Let me tell you, I'm very pleased that I'm here today with you on this topic. It's one of the topics that we try to put forward at the forum because it's an important topic. Water is scarce. We all need it, we're all part of it, we use it every day, and we want to drive new initiatives to also cherish its value. Let me give you some maybe historic facts about that initiative. The Blue Peace Initiative journey started more than 10 years ago, so it's not new. And it was based on the recognition that fresh water resources can be as much a source of conflict as a factor of peace, prosperity, and development. We know that very well in Switzerland. We have the Rhine, and we had to negotiate with Germany and the Netherlands about the use of water to avoid this kind of conflict. So in 2015, 15 countries launched the Global High-Level Panel on Water and Peace in Geneva. Geneva is also today a water hub where water issues are very, very well discussed, deeply discussed in a very good setting. So 2 years later, in 2017, the panel published its report, A Matter of Survival. Among its recommendations, the necessity to develop a sustainable financial mechanism aimed at promoting water as an instrument of peace. So we agreed all on that, and then we asked ourselves, so what? We have another report, what do we do? This is how the Blue Peace Initiative, financing initiative, was co-created in collaboration with our partner, the UN Capital Development Fund, UNCDF. So we really wanted to use the report for once, a good report, and make something out of it. Since its launch in 2019, so it took another 2 years, at the high-level dialogue on financing for development in New York, where this year the Water Conference will be held, its official launch at the World Water Forum in Dakar in March last year, the Blue Peace Financing Initiative has paved the way for the development of an alternative financial mechanism for regional and local non-sovereign entities, such as the River Basin organizations. Very important to us, we want to give power to regional organizations. We work very much in regionalization among our cooperation programs, and they often lack the financing they should get to develop the region. So we started something that has never done before. So the Blue Peace Financing Initiative offers a new instrument to combine impact investment within new frontiers and with new players. So transboundary basins, water basins worldwide, do not have a cooperation framework, neither do they have an agreement. Actually, 2/3 of them don't have it. That means it is a huge potential. This potential we want to use. So the Blue Peace Financing Initiative provides a financial incentive for transboundary and multi-sectorial water cooperation by using water as an entry point for such cooperation frameworks and transforming them into investment platforms. So that's why you are here, to invest. In a nutshell, this initiative is about peace and sustainable development through water, and the investment is worth there. The issuance of the first ever Blue Peace Bond is planned for 2023. So you can be part of the pioneers of this. And for anything to fly, we need pioneers first, and then it makes it easy for the next ones. The bond will finance the strategic investment plan of the Gambia River Basin Development Organization, OMVG. So they have actually already worked. So there is a plan, which is important. So we don't have to start from scratch, knowing that the OMVG is home to 29 million inhabitants, the development of much needed infrastructure projects that will provide access to clean and affordable energy, safe drinking water, and food security will have a high impact on populations and poverty reduction, which for us is the ultimate aim when we engage. It is clear that financial innovation can generate significant progress across the Agenda 2030, where we lag behind, for sustainable development. But investment and innovative financing alone will not be enough. To address the systemic nature of global risks, including climate change, pandemics, and the threats to peace and security, we must find better ways to sustainably manage our limited natural resources. We must reform our financial ecosystem and shift towards long-term investment in the sector. So I'm confident that this event will be the beginning of something new and the continuation of something that has already started that is promising. So thank you for coming and thank you for your interest.
Many thanks, Patricia. So we will remove the podium so you can see the presentation. Patricia will stay with us throughout the event. I would now like to introduce the team from the UNCDF, Jaffer Machano. Before joining UNCDF, he was head of global banking Tanzania at Standard Chartered. You were also deputy managing director of the Tanzania Investment Bank, and you worked for the Federal Reserve Bank in New York, and you also worked for Barclays. Jaffer, please. Jaffer, an applause. Yeah, this is quite a CV. And Jaffer is accompanied by Rukan Manas. Rukan was with us at the Swiss Development Agency, at the Geneva Water Hub, and in various other Swiss agencies. Rukan will start off the presentation. So Rukan, please join us, and the floor is yours.
Thank you so much for having me on this panel. Hello to everyone. So I think we have... yes, great, thank you. As we've heard today, the blue peace, the notion of blue peace goes back to Swiss water diplomacy, and it recognizes the fact that the water crisis is real, it is happening now, and it is getting worse, and water can be a factor of conflict. But what blue peace approach is trying to do is we try to turn that around by saying, because of the nature of water, water doesn't know any boundaries, no sectoral or national boundaries. Water can actually be used as an entry point for cooperation and peace, and it can contribute to create societies where everyone has access to safe, affordable water-related services, be it drinking water up to energy, and it can contribute to better water cooperation and more sustainable management of these water resources. We at UNCDF, we are working towards this through initiatives and instruments that unlock public and private capital to all these areas. And how are we doing that? So we work directly with local and regional non-sovereign entities who manage water resources, such as river basin organizations, and we support them to get direct access to the capital markets with different financing instruments. And we are doing that by using water as an entry point to create these transboundary and multi-sectoral cooperation frameworks and to transform those into investment platforms. As you can see, this in itself creates a self-reinforcing cycle where these entities can go back to the market, to the capital markets over and over again, because the whole mechanism, you will hear a bit more later, comes along with very strong capacity building, institutional capacity building for these entities. Here you see the different tools and some of the features that are underlying to the Blue Peace Financing Initiative. Before we go into the details of that, something that I really want to highlight is the potential of scalability of the Blue Peace Financing Initiative. As we've heard, we have 286 transboundary basins worldwide, and 2/3 of them don't have any cooperation framework or agreement. You will hear from my colleague about our pilot case in West Africa with a river basin organization. So this is just one of them. But by demonstrating that this is doable, we give all these countries a strong financial incentive to actually get to these agreements and to create these cooperation frameworks. And this is how Blue Peace comes along with what we call a peace dividend. And with that, I would like to hand over to my colleague.
Thank you, Rukan. Thank you, SDC, for hosting us. This is a great opportunity to discuss Blue Peace further. Maybe for this second part, the best place to start is why we chose the Gambia River Basin. After the report of Matter of Survival, we actually did a lot of research, scoping on the desk and actually being on the ground to discuss with quite a few people. And we were looking for an area to pilot where the political agreements are already there. And this is when we really got into first a surprise that there's all these river basins other than Europe. I'll say actually a certain part of Europe, because we realize there's a lot of other value of Central Europe that agreements are still not there. But we realized West Africa was unique. They had the political agreement, but they did not have the capability to do the investment. And this is why we chose Gambia River Basin. So it's 4 countries: Gambia, Senegal, Guinea, and Guinea-Bissau. The highland is Guinea, and the lowland is Gambia, where the river flows through. So the blue part of this is the whole basin, and that's where the master plan got done. So this is a very interesting way to see pictorially where this is going. So we pitched this idea together with the research to the 4 countries, and the Council of Ministers sit together and issued a resolution to accept to become a pilot for the methodology. And for us, this created a turning point, because when you have 4 ministers of 4 countries sitting together to agree to issue an instrument, it's really, that's where the cooperation of sharing water had come in, versus, because a lot of ministers sit to quarrel who has the biggest advantage, where the water will be used more, and the like. And I have to say sorry as I'm starting to do this, because it's a little bit of detail and a bit of technocracy. The best way to read the mechanism is from left to right. We start with the Basin organization. That's the one. Thank you, Ambassador Christian. And we spent a lot of time now, about 3 years, on that green section of this picture, which is capacity building, master planning. And this is where the biggest support of the Swiss government has really made a difference. And to be able to create, to come up with what are the projects that needs to be financed. Are they a priority of these governments? Can they pay back the financing structure? Because we didn't want to come to the market and then not being able to show the investors that this is something that is doable. So we did all of that. This master plan, which has been created by a French engineering consulting company, is now in place. It's going to be approved by the ministers in the coming council on the 23rd. And we have now identified the first portfolio that will come out under the Blue Peace Bond. Because the institution itself is a political institution, is formed by resolutions from the governments and the parliamentary approvals, we had to create an SPV, which is a corporate body, and that's the one will intermediate with capital markets. We will continue to support OMVG as it's issuing its first bond. And we are looking at this point, this is the support that we have provided. Again, majority of this is global consulting engineering firms, from master planning to technical support within the OMVG, and quite a bit of legal review. This is the detail of the structure. I won't spend enough time here unless there's questions from financiers in the presentation. But we have just got an approval from the European Union that they will support the credit guarantee of the bond. And after presenting to them for a year now, they see the value that has already been created by development partners. They've accepted to issue the credit enhancement that will underpin the bond when it comes to the market. So this is the time for us to bring to the market. This is the portfolio, the first cut of the portfolio. It's about $2 billion. It has energy, drinking water. There's a big chunk of forestry. We are still trying to figure out that. There's a river channel on transportation, and there's potable water. we are right in the middle of that last box. So the light blue and the middle blue are the ones which have already been done. It's been a slog for the last 3.5 years, but now we are hoping, as Ambassador Christian has said, to issue this bond later on this year. But in summary, the difference to the investors is this is a portfolio approach. We are not issuing bond project by project. So you get the benefit of diversification, but you also get the benefit of cross-subsidization of cash flows. If one project is not coming up to par, the other one is coming in. We have about 12 projects in the first portfolio. It has been a very inclusive process, and for once, we will be able to hit both urban and rural communities. Maybe I'll stop there. And it has been a lot of collaboration with a lot of partners to be where we got. Thank you very much.
Thanks a lot. Applause for Jaffer and Rukan. So you see quite a significant pipeline. The idea would be to issue the bond first tranche later this year, right? At what level?
Between 500 and 750 for the first tranche. But the approval will be at 2 billion. So depending on how the first one will operate, and it's a very sketchy market, we know, especially based on these new inflation issues and stuff. So there's quite a bit of the view, but yeah, the hope is between 500 and 750.
Million, right?
Million, yes.
Important detail.
Yes.
Thanks a lot. So I'd now like to introduce our next speaker, Matus Samuel from Economist Impact. So you were on the Policy and Insights team, which is the research arm of The Economist based in London, and you oversee consulting projects, water projects, including the Blue Peace Index, which we will hear more about. Before, you worked at UNESCO, Chatham House, and Harvard Kennedy School. Warm welcome to you. Please join us, and I will an applause. We would like you to respond to the following two questions. The first one is, can you tell us more about the Blue Peace Index and how it could help Blue Peace finance to actually be scaled also in other parts of the world? And then the second, measurement of impact is important. We keep on hearing it again. How do you measure impact of this type of financial product? So, looking forward to hearing from you.
Thank you so much. Thank you, Mr. Ambassador. Thank you, Patricia, SDC, and of course UNCDF for co-hosting, organizing this event. And thank you, everyone, for turning up to what I hope will be a really great and important discussion. So just to answer your question, Mr. Ambassador, obviously the Blue Peace Index is an effort from The Economist Impact together with SDC to assess the level of Blue Peace. So what do we mean by that? Of course, we as the research arm of The Economist, we are not experts on water, but what we do is we partner with partners around the world to address the most pressing issues in terms of social and economic development. And therefore, over the past few years, we have been working very closely with our partners and colleagues in SDC to develop a comprehensive assessment of transboundary water management. And that's what is the Blue Peace. So what we have developed, what we are trying to look at is to what extent do countries and basins around the world manage their shared water resources in a sustainable, equitable, and collaborative manner. And so far we have looked at around 30 countries in 7 basins around the world, including Amazon, Mekong, Sava, Senegal, Tigris and Euphrates, and most recently Amu Darya and Sir Darya in Central Asia. And what the index does is basically it is providing a holistic overview of the transboundary water management mechanisms, tools and instruments that are available and functioning in the countries and in the basin. So we are looking at 74 qualitative and quantitative indicators across 5 domains, and these are measured at both the, or some of them are measured at national level, and some of them are measured at basin level. So we are really trying to provide a very holistic and comprehensive view of what is happening on the ground in the countries and in the basins. And so the 5 key areas, key pillars that we are looking at are starting with policy and regulatory frameworks, where we look at both national and basin level agreements and regulations when it comes to water management, but also a broader environmental regulations, as well as international conventions. Secondly, we are looking at institutions and stakeholders or participation. So we're really looking at institutional setup at, again, national level, but also basin level. And importantly, we are trying to look at the integration and participation of various stakeholders across the chain from both national level and basin level. Thirdly, we're looking at water management instruments or tools. So looking at, again, tools and instruments that are available at national and basin level when it comes to water efficiency, when it comes to quality management, when it comes to pollution, but also disaster management and disaster response mechanisms. Fourthly, we are looking at infrastructure and financing, and I will speak about that in a little bit more detail shortly, but also obviously a very, very crucial element that we will discuss in more detail. But finally, we are in the index looking at sort of what we call a broader cooperation context, because obviously you know more than anyone that water is essential. It's at the heart of things, but it's not the only thing. And it really, cooperation over water is related to cooperation and collaboration over other resources, over economy, over political issues, etc., etc. So what we are trying to really factor in are the broader environmental, political, and economic factors and risks. So just very briefly touching on the investment and or infrastructure and financing pillar, again, this is a sort of provides a high level, fairly holistic overview of the enabling environment for financing and investment in transboundary water management and infrastructure in the countries and basins, looking at sort of 5 key areas. Firstly, national public investment, private sector investment, in broader investment climate, that of course is a strong predictor and a necessary requirement. And then at the basin level, looking at organizational and sort of operational financing for river basin organizations, as well as infrastructure financing. But obviously, this, as you can see, it is a very sort of high level holistic assessment that provides a general overview and fits into a benchmarking or a comparative framework that the Blue Peace Index is. And so what we are starting to work on now with our partners from UNCDF is really to try to take this benchmarking comparative framework and assessment tool that provides a very holistic but broad high-level overview and really use it and tailor it for the specific needs of facilitation of increased finance and investment into the Blue Peace, into transboundary water management and cooperation. And so that's what we are trying to do, and we have started working on developing a standardized mechanism for the Blue Peace financing initiative that will really allow us to engage experts and stakeholders to create a systemic framework. And the framework, Mr. Ambassador, as you asked to your question, there are sort of two areas in terms of how we want to promote the Blue Peace financing. There are two levels. So firstly, of course, it's about promoting the right, identifying and promoting the right and sustainable investment. So the framework that we will be looking at, the assessment tool that we will be developing, will be tailored and will be aimed to help identify the key factors of successful deployment of Blue Peace finance. So really looking at what are the necessary conditions of where and how the Blue Peace finance can work, and what are the best practices in terms of the actual deployment in practice. And so this is the first step. And then the second crucial step, as you indicated, is the impact, is measuring the impact, is thinking about how we can really understand what works, how it works, why it works, and really try to demonstrate that. And that is the second big part of our efforts, is try to create a outcome framework and that will explicitly link the inputs or the Blue Peace finance, the investments, with a measurement of impacts, linking them to the broader outcomes. So not just the sort of direct outputs that are coming from a program itself, but really conceptually linking it to the broader goals and objectives of Blue Peace more broadly. And that's how we envisage we will link the initiative to the broader Blue Peace Index that provides a sort of holistic overview of progress and in terms of promoting and delivering Blue Peace over time. Thank you so much.
Thank you very much. Please, an applause for Matos. So we have the pipeline, you have the capacity, we have the agreement in the basin of the member states, we have the financial structure, we have the bond, we have the impact and impact measurement. What is now missing is the banker. So, Hans-Rudi Mosberger, you're heading asset management and sustainability at the Swiss Bankers Association. You have a long career in asset management. You started as a pension actuary, then joined UBS. You're also part of the Swiss negotiation team at the COP and part of the federal government's advisory board on the Sustainable Development Strategy. Mr. Mosberger, please join us.
Thank you for having me here. It's always special to be on a stage as a banker and to be announced as a banker, because that kind of creates expectations.
I think that was the purpose.
You started with an interesting illustration, and you said you start looking at it from the left side. I, as an investor, I do the exact opposite. I start looking at it from the right side, because it's an investment. An investment means I put money into projects or into instruments, and I expect them to generate returns that come back, risk-adjusted returns. We know that there are risks involved. So that's why we start looking at it from the other side. Now, obviously here, impact is important, and that goes into the whole topic of sustainable finance. Creating impact is kind of at the highest ambition level that finance can have when doing sustainable finance. You can start about reducing risks and then gradually go into creating impact and then do real impact, like impact investments, that's what you're talking about here. But I've already started giving a short outline.
Perfect. Precisely. Looking at the current, situation and environment of financial markets, and then specifically looking at this whole area of sustainable finance. So what is your take? Where do we stand, and what are the perspectives of sustainable finance within the current market environment?
Sustainable finance has been around for quite a while, and Switzerland has been a pioneer in that area for many reasons, mostly also because we have very demanding clients on one hand, and we have a very diverse client base. We have institutional clients, we have family office, we have ultra-high net worth individuals, also retail clients that want to invest more and more with purpose. So that's important. It's not just a financial investment, but it is financial, but related to a purpose. That's becoming more and more important, and that's ultimately sustainable finance. So sustainable finance has, as I said, a 30-year history in Switzerland at least, and there's also a strong ecosystem. However, this has been kind of not niche. Now we would even say it's going mainstream, but it has not been kind of, it has been limited to an extension of traditional investments, let's put it that way. Sustainable finance has been a priority with Swiss banking now for about 5 years, and it's a top priority. It keeps me very busy, by the way. But and it has been growing now very rapidly. Also the interest from politics, etc., sometimes almost too much. But what has been a game changer was, in my perspective, COP26. COP26, with the announcement of GFANZ, the Glasgow Financial Alliance for Net Zero, has given guidance for the financial industry and a commitment by the financial industry, especially to mobilize private capital. And that's a private capital that is so much needed to go into projects like that. And we are talking about huge amounts. So GFANZ has done all the analysis, and I have done a back-of-the-envelope calculation what that would mean for the Swiss market, and it comes to only in blended finance, which is a sub-area, of roughly 15 billion per year. This is a big amount, but relative to the assets managed in the Swiss financial institutions of more than 4,000 billion, it's a relatively tiny amount, or let's say it's a small allocation decision.
Thank you. Well, 15 billion it's a small amount compared to the overall, but it's not bad for what we're trying to do here. How do you see the potential for what we're trying to do here?
As I said, things have changed. So now, over the last 1.5, 2 years, my colleagues in other countries and the whole financial industry is trying to position themselves into that area of mobilizing private capital in not so traditional areas, be it country-wise, be it topic-wise. Why that? First of all, it's obviously needed for all of us. These investments are needed. And second, there are simply practical reasons. First, every extension of the investment universe is good. So you have more opportunities to invest your money. That means you have better diversification. That means ultimately you have better risk-return characteristics of your overall portfolios. And that's what you as an investor are looking for. But this is subject to investability. The investments that you are considering must be first accessible, and then they must fulfill certain criteria. We call it mostly investment grade. That means they have to have a certain counterparty risk, minimum counterparty risk, so that you can, under regulatory or other considerations, even consider them to be put in your portfolio. And that's where the whole mechanism comes in about guarantees. We call it blended finance, mixing public and private money. So essentially public money to create impact and to catalyze private money. And the more private money you can create with the public money, the better. We call it the leverage factor. So you have to focus on the leverage factor in order to get to the amounts, because the money is around. When you look at just a practical case, if you have a wind farm in the North Sea, the investors are queuing up. If you have that same type of wind farm off the coast in West Africa, you are struggling to get finance. Why is that? It's a counterparty risk and country risk, obviously.
So a last question, and you can give me a direct answer, since you have the privilege to be in the Bankers Association. You don't have to make the investment decision yourself. This Blue Peace bond, how do you assess its potential?
As I said, what is a difference, and it's really positive, I talked to you about it. It has been designed with the investor perspective in mind as well. Just not the left side, that's why I said it's also the right side that matters, okay?
I like the
Left, right.
it's almost political, right?
No, I won't say, I would have done the same if it were in the other way around, okay. So this is one. The second point is investors don't like one-off investments where they have to do the reassessment all over again, the due diligence, suitabilities, and all those things. So what we are, as investors, looking at are things that are first scalable, so that the amounts can go up, and that are replicable, so they can be copied. So that creates then a track record that attracts money much more easily, because doing due diligence for small amounts of money, going through all kinds of legal papers, I can imagine you have a big pile of papers, it's not something that you like to do all over again, because you need diversification, you need many of those investments. And so from that perspective, this initiative has all the important ingredients to be successful. Now, obviously, as with everything, timing is an issue, and the devil is in the details. Okay.
Thank you very much, Mr. Mosberger. Please take your seat. So now that we've heard from the panelists, we would like to turn over to you for questions. Yes, please state your name and affiliation.
Thank you very much. Joël Ruet, President of the Bridge Tank. We are a G20 think tank, and this year we are putting together the Green and Blue Sustainability Report for the G20 under India's presidency. I have a question. I'm convinced, but I'll play the devil's advocate. I have a question on collaterals. In our think tank, we share this, but let me just share 2 points of context. A, we share the same analysis. We've surveyed the OMVS, which is the Senegal River Basin Organizations, they're native. We've worked also through the Swiss diplomacy with some of the river basin organizations in Central Asia. We share your conclusion that there's a tremendous potential. We understand the value of the index. Still, you'll have to convince investors, so you don't have prima facie returns. You do have the underlying factors. Do you have collaterals? Are they useful? I take the example of the Senegal Authority. They have dams, they do hydro power production. Is it an argument for your investors? Can you anchor your bonds on those collaterals? Is it advisable? Is it advisable not to do that? How do you convince the investor?
Thanks a lot. That's probably a
Private
question for you.
Yeah.
Jeff.
So I don't know if we could get back that structure diagram, but the answer is yes, there's collateral. And this is an infrastructure project, right? So
It's this one.
when I say we have about 7 to 10 projects,
The next.
No, the one before.
this is maybe it's a little bit too detailed.
Okay.
This
This
one.
one.
No?
Yeah.
Yeah, when I said we have 7 to 10 projects that come to about 2.2 billion, and then we will do the first tranche of between 500 to 700, is because each and every project has been identified. There's a feasibility study to it, and it has shown what kind of cash flow it will be able to pay back. Now, the trick is to put all of them in one portfolio, and this is the innovation. This is why the SPV is there under it. The reason we are putting it in SPV is because the SPV is corporate body. It will be registered under a particular government, maybe Senegal or maybe outside, for the comfort of investors. This is something we are doing starting from now on the roadshow. And therefore, when the bond is issued from a corporate body that can be sued or can sue. It can show collateral. It can show the waterfall of cash flows. And it's able to come from the right side to actually integrate with an investor with a documentation level. And the guarantee will sit between the SPV and the bond. So basically, the left side of this is development, and the right side of this is capital. So this is how the mechanism was designed. So I am 100% in agreement with you. This took a long time to get here because we needed to convince OMVG and the ministers that all these projects, yes, they're very good and they will help for investment, but they have to meet the criteria of investors.
Okay, thank you. Next question.
Yeah, hello. Maybe just to build on what has been said, just to share a reflection, not necessarily a question. You mentioned it's an infrastructure project. Water is at the core. You also refer to energy. Sorry, I didn't introduce myself. Raphael Schungen. I'm an investor advisor in the field of hydrogen. Used to be the chairman of the European Hydrogen Association. And so you refer to infrastructure, hydro. Have you noticed probably that actually the rivers that you are looking at, they are in itself an energy asset, and not only an energy provider via hydro, but also a major storage.
Mm-hmm. Yes.
Because if you do hydrogen and you break the water, this is a storage of the solar, the wind that you could have around. Yes. And then you have an energy vector that could be used for all the vessels, and you don't import any more oil or gas. And you can also develop new activities around this.
Yes.
And so in the portfolio of assets and projects that you could put forward, beyond the hydro, you could have an array of these types of assets. And another thing is, when you reuse the hydrogen, you get pure water that can go back to the river basin, or that can be used for drinking. So I think there is, around the water topic, we have not gone to the end of it. We're just focusing hydropower, but it's much more than that.
Thank you. Yeah, yes, Jaffer. I think it's the next one.
Yeah,
right?
this is why I put on this slide. We are 100% in agreement with this, and there's a debate around it. We were the master plan technical engineering team has pointed this out, and it's in a digital format that those files can be quantified in terms of the geology of it. The question is, which asset do you bring into the market that can be risk-adjusted, priced? And we spent 2 months after building bridges, talking to different investors and mostly buy-side people. And they said, look, create an instrument that I don't have to start looking on how to price it. Or when it comes into the buying desk, they don't have to go around to start figuring out how to put it. So I think these assets, very unfortunate, will be second phase because it's just I don't think the investors are ready to price a geological-based asset.
Thank you very much. Yes, please.
Interesting, this one.
Yeah.
Thank you very much. My name is Dorothy Maseke from ICA Lion Group in Kenya, an insurance group. You mentioned replicability as being very important. And I just want to direct this, and that's, of course, in building a track record. So I want to direct this to Jaffa. Assuming that we want to replicate this for the East African market, the River Nile, the Nile River Basin. And of course, there are very many political, I can see you smiling, engagements and political issues to do with that. You chose the Gambia River Basin because you said political treaties already there and it was much easier to progress the discussion. Now, what would you advise us if you were to look at an area like the Nile River Basin? What is that one or two things that you could advise us if you want to think of something like this?
In American football, there's a term called punting. This is when I punt to the diplomats for this. Look, this would not have been possible if it was not that the financial mechanism is behind the Swiss diplomacy, right? It's only possible because the Swiss diplomacy did these first 10 years of convincing people that the political agreements that you have can be design a financial mechanism on top of it for it to be possible.
Maybe I can just add to that on the question on replication and how this can be supported. This is also where the assessment tool that we're developing with the Economist Impact becomes important. What we will do in terms of replication, we want to approach that in a strategic way. River Basin Organization, when they send us a request, we will look into their context and evaluate their readiness for the Blue Peace Financing Initiative based on specific criteria. Each River Basin Organization will receive this information, even if we conclude that the River Basin is not ready yet. We will have a specific recommendation on why. And this is how those entities can then actually, work in those areas and build it up.
Thank you very much. We are running out of time. A very quick question and rapid answer, if I may, in the back.
Yes, my name is Andre Güdel. I'm with KPMG and heading the KPMG Switzerland-Africa corridor. We just published at the end of last year a report on the legal, regulatory and fiscal frameworks in sub-Saharan countries, a selection of the sub-Saharan countries, and we found out this is extremely important for investors. We were specifically looking into life science investors, which are building up manufacturing plants in this region. How is that built up in your program, and how do you take that into consideration? Because from our experience, our clients are always looking at these aspects before they are considering an investment.
Okay, thank you, Jaffer. That's for you, and afterwards we'll go to Patricia for a few final remarks.
So if you look at the Blue Peace Index, the first one is legal and regulatory environment. And you could not have said it better. And there's actually two bigger parts. One is the regulatory environment within the country, and two is how good it is in terms of quality of that regulatory environment that a foreign investor can be comfortable with, that they put their money in and can come back to them, right? From paying back interest and all of that. So it's for us, it's the initial assessment during scoping is the regulatory environment of both the countries that they're involved and the way that the basin is going to be managed, for the interest of time.
Thank you very much. We'll go to Patricia Danzi for final remarks, and then I'll come back to each of the panelists. You have one sentence, very brief, so not a Schachtelsatz, as we say in German, one sentence to say why we all should be investing into Blue Peace Finance and in particular into this Blue Peace bond. Patricia.
Thank you, Christian. I'll also be brief. It was an extremely important discussion because you had the chance to question us and to grill us. What did we do? And it was a long investment to get where we are today. And it's also something that is scalable. And you heard that the ambition is bigger than just one project. And this you have to know. So you're part of something that potentially is including all the river basins around the globe. That is the idea. Now we have to start small, even if it's 2 billion. We have to start small and grow this plant into some big tree. And I think we have the right people here. We will have to broaden this space. We have the right questions and the right experts around the table. And we can also welcome others to join us and to challenge us. Because if this works, then we will have a real impact for millions and millions of people. But we have to start somewhere and continue learning. And I really would like to invite you to take this risk with us, with Switzerland and other countries and other donors, and start and then learn. It has been a long process and we need now to go live.
Absolutely. Thank you, Patricia. One sentence, Jafar.
I think it's a long-term, stable, renewable source that is going to keep on giving back to the investors. So it's one of the best investments to get in.
Rukan.
My message is to investors, you can stop looking into innovative impact investment opportunities. Here it is.
Matthias?
I definitely agree with that, and I would say that we have seen that transboundary water investment is at the center. It's absolutely crucial for long-term sustainable social and economic development, and this could be a game changer.
Hans-Rudi Mosberger?
Well, mobilization of private capital is really needed. And I think we need an alignment of the whole chain of financing, and we need a lot of more projects like that or initiatives like that to get to the level that is required.
Thanks a lot. Thanks to the panelists. Thanks to all of you. I have heard many times this week at the WEF crowding in private capital. So crowding in means money. It also means people. I've been at half a dozen events about development finance, and they were all done in small groups like this. So we need money, but we need more people, more experts, more investors joining us. So all of you are our ambassadors. So please go out, spread the word. It's a great opportunity here. We look forward to hearing more from you. It's also the beginning of a roadshow. We will continue with a series of events linked to water events, then toward the issuance of the bond in the second half of the year. So thanks for coming, and thanks also to the organizing team. Coffee and the discussions with the panelists.